Welcome to Forex Investors Alliance. Thank you for joining us today. My name is Dylan. Today we will be discussing trading with zero indicators. What if I told you that this is all you needed? All you needed to know how price was going to move next, or have a better guess at how price will move next, is price itself. What if price itself is the best indicator that you could ever use, and all these indicators that are given to you are distractions from what's really happening, from what's really going on, right? What if all these tools were given to you to keep you focused on numbers and averages, yet the market will never be based off of averages and can never be based off of averages because the market is a 100% unique environment. We all know this. The market is 100% unique. The market is a fractal itself. And knowing this, we know that the past cannot judge what will happen in the future. Just because it would be like saying, yesterday I went outside and a coconut fell on my head. It would be like every time you go outside afterwards, you expect a coconut to fall on your head. Do you really expect that to happen? Do you really expect that to happen every day? No. So why would you rely on indicators that are based off of averages of the past? Why are we relying on indicators that are based off of movements that have already happened when we know the market is a 100% unique environment? Why do we do this to ourselves? Why do we put confidence in something other than ourselves? Well, today we are going to be talking about trading with zero indicators and how to do that very thing. Trade with zero indicators. Okay, so if you recognize this chart, which you should if you are in forexalerts.online, if not, go to forexalerts.online. That is our channel where we send news, alerts, and Forex related events and videos and education. Also check out forexcommunity.online. It is our chat room with over 1,100 plus members, with located all across the world, all trading different unique currency pairs. So you can also check out forexia.net if you'd like to learn more about Forex Investors Alliance. You should recognize this chart, GBP/USD. We got in buy positions last week, right here, buy position number 1 and buy position number 2. Currently in 100 plus pips profit on both positions at the moment. Last night, we expected a 50 pip retrace against the trend, and I sent this this analysis last night for you guys to take against the trend. Here was our entry zone, this black box, and here was our take profit zone, this black box. It was a 53 pip movement against our current buy positions, a 53 pip hedge that you could have collected right there. But more importantly, how did I know that this was going to happen? Alright, well, first of all, we could see if we move some of this stuff, we can see there is a zone right here. There is a high right here. So price at the time that I sent the analysis was right here. I saw this spike into that zone and a small rejection of that zone. I thought to myself, well, there's a spike into this zone. It looks like this is consolidation. It looks like the daily structure will be completed as so. Like that. And that's what I thought would happen. Now that's not what I drew, but that's basically what I thought would happen. This is what I drew. Okay. We can see the consolidation here, and we can also see a bit of a consolidation in this area right before that hit to the high. Now, how did I know that the dealer was going to take that second hit to the high? How did I know that we could have an entry possibility up here? Well, there was a high created here. I thought of the possibility of a dealer creating an M formation to make it look like, or the start of an M, I should say, to make it look like an uptrend. But really, we know what that is. That is the second leg of an M. Right into our entry zone. So, our entry zone is above the first leg of the M, always. The second leg, we can see played out exactly how we wanted to. Now, as far as the TP zone, the take profit zone, how did I know it was going to drop 50 pips? Well, first of all, there was this gap right here. Right in here is a gap. That was not filled at the time that I sent this analysis. And that is one of the main reasons that I believed that the dealer was going to adjust his positioning against the trend. So instead of taking take profit right here, I placed the take profit zone down here in this area because I saw the consolidation here. If there are buyers in this consolidation area, right, where would their stop losses be? Their stop losses would be in here, right, in that area. So it would be pretty obvious that since knowing the daily structure, the dealer consolidates and then hits the high and then comes down and hits the low and then ends the day off in consolidation. and that's why I had the arrow kind of pointing up here, because I thought it would go up and then consolidate here, but it looks more like it came down, and then now it looks like we might have a W formation being created to continue the uptrend right here. But at the moment, that W is being formed at Asian session, and that's normally not a good time to trade, in my opinion. So, why didn't we move, or I should say, why didn't I have a take profit, down here, or down in this area? Well, does GBP USD normally drop 100 pips a day? No. It drops maybe 50, 60, 70 pips per day. That is the daily range of GBP USD. So, I had a take profit at 50 pips. I'm not going to extend the take profit to 100 pips or 200 pips when this is an intraday, or I should say a intra-session trade. It is a very short-term counter-trend trade. It took 2 hours and we caught 50 pips. We were out just like that. And we remain in our buy positions, going with the trend. So, what are some main factors that we have to look for when trading with zero indicators? Well, number one is the timing. Number one is the timing and the consolidation. When does the market consolidate and when does the market move, right? So we can see here, I've talked about this all the time, session changeover 90% of the time is when the market consolidates. This is also Asian session most of the time. End of New York session, beginning Asian session, and then the end of Asian session, the beginning of New York session, or I should say the end of Asian session, beginning of London session is when the dealer will make his move. When the dealer will either break to the high or the low. Now there's no special template for this. There's no special indicators for this, because every day is unique. Every day is a unique day. But when we know that the dealer targets the highs or the lows of certain days, then we realize where the trap zones and the trap liquidity are. So here we have GBP USD. We see that there is accumulation in here. There is a large amount of consolidation in this zone. The dealer creates that M formation, reversal, and then comes down. Alright, let's say we didn't catch that, even though it was really obvious. Let's say we didn't catch that. But we see the next best thing. What do we see? Price is now at the low of yesterday. Okay, what else? Alright, we see the daily range of GBP USD has been exceeded. The GBP USD moved 120 pips in that, down trend, in this down spike. In 13 hours, it went 125 pips down. The dealer now knows that there are too many sellers in line with him, so he must consolidate off of the low that was created here and in this liquidity zone that we have right here. Now the daily range has been met, right? It's been exceeded. We don't expect the GBP USD to go down much more because it's been exceeded. What happens? The dealer comes off of the low, consolidates, and then hits the low once more, consolidates here at the low, hits the low, strikes the low once more, and then reverses, ending the day in consolidation, hopping to that next zone, right? Now the same thing happens, just a different variation. We can see it here as well. Here's the yesterday's and the day before, the high of that day. We can see a spike into the high of the day. Also, after the accumulation session, after that consolidation period, that is the fake out and the stop hunt to the high, we can expect a move down. If we caught it right here, how many pips will we go for? 30, 40, 50 pips maybe. This was a 65 pip move. Could have been done right there. If you wanted to, you could have seen this small head and shoulders pattern or this W formation and taken it up again for 90 pips. And then seen, oh, it looks like the dealers are working the high again. Dealers are working the high again. Look at all the spikes into that zone. These spikes grabbing liquidity, hitting stop losses, and then that reversal to end the day in consolidation once more. What happens? Hit to the low, hit to the high, end the day in consolidation. Consolidation, hit the high, hit the low, end the day in consolidation. Hit the high, come down, end the day in consolidation. It's really all there is to it, you guys. This structure right here is the daily structure. This is what you can expect or variations of it each day. You can see it right here as well. Right in front of you. Right in front of us. Okay, and this is what we caught last week. We caught that spike to the low where most retail traders were selling and were induced to sell. We bought and instantly were shifted into 100 plus pips profit. 3 days later, we're still in the trade. Based on that uptrend, and we're still using a 15-minute chart, even though we've been in this trade for a few days. You know, people say, well, why do you use 15-minute charts when you're trading, you know, aren't you trading like for 20 pips? Isn't that what the 15-minute chart is for? No, the 15-minute chart, why do you put expectations on, you know, things that can be used for whatever, right? People put covers over these things or expectations over something that, you know, can be used for other uses. The 15-minute chart is just as useful, in my opinion, as any other time frame. Okay, we've went over consolidation, daily structure, the session. Now the average daily range. That's basically going to be our last topic. Average daily range, I wanted to talk to you guys about the average daily range because it's based on how much the market can move in any given day and where your entry and exit positions should be. So let's say we know the GBP USD has a well, let's just see. We can go to a Forex Volatility Calculator, type that in, or go to investing.com, Forex Volatility Calculator. GBP USD for the past 10 weeks has had a 101 pip average over 10 weeks. So this movement here that we see was 120 pips. They exceeded the average daily range, so you could have expected a reversal upon exceeding that daily range. Here, starting here, ending at 100, what was it, 101 pips? Right here is the daily range. That's the ending of the daily range. So you can see the M formation right here, as if the dealer was going to come up and then keep going. Why would he keep going? His range has been completed. He no longer can move the market much higher because he has his limits as well. All right, so we can expect some sort of retracement here. The dealer's not going to out of nowhere just move the market up hundreds of pips. He has to have an excuse to do so. So like Brexit or a high impact news event to trigger that type of volatility for him to move the market that far or that much. So knowing this, and each day it's different, right? Each day it's different. These are just averages as well, you guys. These are averages as well. This could be called an indicator as well. But just knowing that the dealer has his limits, it helps you understand that the market can't go one way forever. The market has to retrace at some point. So that's basically the average daily range. I know a lot of people don't use stop losses, and that's fine. I mean, I use stop losses because mine are very small and I like my entries very precise. But I know some people use stop losses, or I should say don't use stop losses, and they're fine. But know that the dealer does have limits as well. So if you don't use a stop loss, that's somewhat comforting, I guess, knowing that the market isn't going to swing one way, hundreds or thousands of pips, without really telling you first. I guess I should say, like, notifying you first. The dealer can't move hundreds or thousands of pips without there being an excuse to do so. although it can happen and it has happened, there has to be some type of event that triggers it. So I guess this was basically what I wanted to talk about today with you guys: the trading with zero indicators, how it's done, how it's possible. It is possible, and price will move the way it has to. Price will move no matter what the indicators are saying about price, because price is a different entity. It's a separate thing. Price is price. Okay, price. It's just price. These indicators are based off of price. An indicator can't predict the future if it's not based off of, if it's being based off of past presets. So I guess what I'd like to end this video with is, what is your biggest challenge when trading? And I know we sent this question out to the group on Telegram, forexalerts.online. If you're there, you can find it and check it out. And a lot of people have trouble with entry and exit. That is the most common failure for a lot of people. The biggest challenge. And what I'd like to show you guys is what you're having trouble with is entering when price is in this area, or when price is consolidating. A lot of people enter when price is consolidating. Let me put it this way. At the start of a new day, the dealer's range has now been reset. Every day, at the start of every new day, the dealer now has a new 100 pips to work with, right? It was 101 pips on GBP/USD as the daily range, average daily range. Now, knowing that this is the start of the day, and this is normally when they accumulate for a few hours, why would you place any buy or sell orders in this accumulation or consolidation area at that time? Why would you even trade Asian session knowing that the market's not going to move until London session? Knowing this can be something that helps you a lot when you're trading. So let's say you're right here. Market is in this consolidation area, right? We see this breakout, and then that reversal to the downside. None of this should look like a valid opportunity to buy or sell. None of this area within here, or here should be valid for you guys to sell or buy. Why is this? Because the daily range has not been met. Why would the dealer reverse after spiking just right there? Why would he reverse right there? Or let's say it's in consolidation. Why would the dealer spike down 10 pips and then go 100 pips in the other direction? The dealer has his range that he has to fill, and he will fill it. So it doesn't make sense to buy or sell within the limits of his range. Within this box here, why would you sell or buy within this box? If you're not selling the high or buying the low, then your entry is not going to be where you want it to be. Then your entry will go into drawdown, you guys. The highs and the lows. Although it's said, and it's, the easiest, most said thing, buy the lows and sell the highs, yet people don't do it. People like to buy and sell right here, or here, or here, or here, and then take 10 pips on their sell order and then get out of the market. Or buy here after that breakout. Why do you buy after a breakout? The breakout already happened. The move already happened. That breakout was half the move, right? This breakout was half of the move already. Why would you buy in here when you know that the market is most likely going to go against you because the average daily range is about to be filled in like 20 pips or 30 pips? It's these mistakes like these, you guys, that are made when exiting or entering a trade. Enter the highs and the lows of the day or the week or the month. All right, here's a great example. Our buy position on GBP USD was at the exact low. What happened? We went into 13 pips drawdown because the dealer spiked the low once more, but we kind of expected that, right? That's why we had our buy positions down here. 13 pips drawdown for a 160 plus pip trade. Now, we're not targeting 160 pips in one day, right? Maybe we're targeting 100 pips. I know a lot of people that after that spike up occurred, they got out. And that's fine. Do what you may, But just know that there are times that, you could have exited. Instead of exiting here, you could have exited here or here. There are better exit possibilities. There are better entry possibilities. Okay? We can see here as well. Here's the high. Let's remove some of this junk. And my computer's gonna freeze, and the colorful wheel's gonna start spinning, and all that fun stuff. Okay, this should be done with in a second. Well, I'm sorry about that. Alright, I'm just gonna explain it over this. The high of the day, or the high of the week, was right here. Orders at the exact high, and had price come up to that exact high, right? Here was the high. Price came up within the pip of that high, and then dropped 221 pips, right? If you're not trading the high and the low, what are you trading, you guys? If you're buying and selling in this area, what are you going for, right? What are you targeting? Why are you buying or selling in this area? That's what you have to ask yourself. This is consolidation. Do I really know where price is going to go in this chunk of consolidation? And if you don't know, why would you enter a trade there? A lot of people, myself included, as a retail trader, we want to be in positions all the time, right? We want to always have an open position. That's gambling, you guys. That is 100% gambling. Only take a position that you are 100% confident in, and that is at the high or the low of the month, the day, or the week, or whatever your trading rules say. All right, these are my trading rules. You can do whatever you want. All right. Well, I really hope that helped you guys. There isn't much else to be said about the entry and exit points other than, go look over the videos that I have, the other videos that I have on the M and W formations that look like this or like this, and these are basically almost zero drawdown trades. These are trades where we get the best entry possible. We have to get the best entry possible. Alright, so thank you guys for joining us. Thank you for watching this video. If you enjoyed the video, feel free to subscribe, give it a thumbs up. And yeah, that's basically all. Have a great day, you guys. Peace out.